Good morning, everyone. Well, markets are stuck in a narrow range Tuesday morning. While yesterday's U.S. data was good, the ISM non-manufacturing index beat expectations and rose to an 8-month high. It boosted stocks only a little and pushed 10-year Treasury yields up by a mere 2 basis points. So the dollar is opening mixed here in Europe today. It's up against the Swedish kroner and Norwegian krone, but down against the 3 commodity currencies, the New Zealand dollar, Australian dollar, and Canadian dollar, as rising tensions in Ukraine boost the price of commodities where Russia has a major market share, such as nickel, wheat, and palladium. The other G10 currencies are largely unchanged from yesterday morning. The New Zealand dollar continues to strengthen. It's opening higher in Europe for the 5th consecutive day, having opened higher 9 out of the last 11 days. This morning's strength was aided by comments from New Zealand Prime Minister John Key, who said the New Zealand economy is heading in the right direction and that the national budget will show a small surplus in the 2014-15 year and increasing surpluses thereafter. Now, the Aussie dollar strengthened modestly, just a bit, after the Reserve Bank of Australia published its monetary policy decision, but it quickly lost all the gains to trade a little lower. There was no significant difference from last month in the comments about the exchange rate or the outlook on interest rates. Personally, I still expect that they'll eventually become more vocal about the exchange rate and will try to talk it down, which is one reason why I expect the New Zealand dollar to continue to outperform the Australian dollar. Also, the different impact of the slowdown in China on the two countries makes it likely that the Kiwi will outperform the Aussie. New Zealand, of course, exports food, whereas Australia exports industrial commodities such as iron ore and coal. The European day is PMI day again. This time we get the April service sector PMIs from several European countries and the Eurozone as a whole. As usual, the final forecast for France, Germany, and Eurozone is the same as the initial estimate. In the UK, the index is expected to have risen slightly to 57.8 from 57.6. From the Eurozone, we also get retail sales for March, which are expected to have declined, a turnaround from the rise in February. Later in the afternoon, the U.S. trade deficit is coming out. It's expected to have narrowed to $40 billion in March from $42.3 billion in February. Now, we find that a positive surprise for this indicator has little impact on the market in the first hour after the data release, but a negative surprise does appear to weaken the dollar significantly during that time period. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, Global Head of FX Strategy at IronFX Global, wishing you solid trading.